Good morning. Maybe not a good morning for some. Anyway, markets do what they do. So I hope everybody had a great weekend and markets. What a rally at the end of the day, right? How many of us would have thought? I mean, I guess we had the thought. How many of us would have believed the thought that it would become a bottoming tail bar by the end of the trading day? We've seen it before. But when you get such range expansions like this, they typically don't come all the way back. Now, yeah, it didn't get back to the high of the day, but put in a pretty good showing to get back toward the opening price. Still below the open, but you got a little candle body there. So now we've got these range expansions. And of course, we look at what's going to happen next and trying to determine the probability of what's going to happen next. So after range expansions like this, volatility expands a tremendous amount. It's going to continue. There's going to be bigger ranges. If you're trading intraday, especially if you're trading the equity futures, you better adjust your money management to compensate for the bigger ranges. You can have small bars. Even if you go down to a 2-minute chart, the bars are going to be bigger. So if you don't adjust, you place your trade, you stopped out in 2 seconds because you didn't make an adjustment. So a little thought before the day starts. So this has to contract over a period of time before any resemblance of a controlled uptrend resumes again. And of course, you say, well, what's a controlled uptrend? Well, this is a controlled uptrend. What was happening here on the 60-minute chart before the drop, where you've got higher pivot highs and higher pivot lows, and there's buying on the dip, and that's controlled. Normal pullbacks or sideways consolidations, and that creates support. It's what we call creating support, a pivot low after a momentum move, and then a retest, and it continues higher, and so on. So we started speaking about the acceleration in the trend around here. And you can go back and look at the old recordings. But we talked about choppy consolidation uptrend, and then acceleration of the uptrend, and then a continuation of the acceleration of the uptrend, which was suggesting time to be careful. So now range expansion came down here, different indices reached different levels. And what happened here at the 20 should reinforce for everybody that no matter what you use other than price, it's subjective as a reference point. It's just something that we put on our chart. We like to use moving averages as a guide for various reasons. We cover in different MT lives and courses, but they're not real support and resistance, whether it's the 50 or whether it's the 200, which some believe, oh, that's like strong support. It's just a self-fulfilling prophecy when the majorities are looking at the same thing. So prices now are down at near the low of Friday, 272, right down here. So the possibility of a retest and a bounce, possible. Right? Since it's gapping down a significant amount, that's a possibility. I think for things to eventually reach a point where these ranges contract. And why should they contract? Well, because it'll reach a point where buyers feel comfortable taking on the supply that's coming into the market. And the interaction between supply and demand will begin to equalize. Obviously, the prior 2 days, supply was overwhelming demand until the latter part of the day, or the middle part of the day on Friday, where it reached a selling climax with a big tick extreme and a wide range bar on the 5-minute, and things began to grind higher. So now they're gapping down big into an area of support. We know it's support because buyers stepped up there on Friday. So will they step up there again? We'll see. We'll look at the futures and see what the price action is, now, and of course, in the first 10, 15 minutes or so of the open. But the 50 MA will become a focal point which is kind of in the middle of nowhere. So you have to be skeptical of that. It's probably going to go down further. And this pivot low right here will be a big focal point. And just looking over to the left, you can see all these green lines line up that pivot. Now there's two pivots down here. So that should be a stronger reference point of support since there was more time, right? More activity. And so what does that mean, more time? More activity of buying and selling, where there are more traders, institutions, hedge funds, whatever you want to call them, that participated in this level, that they may want to step up again. Right? Maybe they took some profits on the way up. Maybe they put the money back to work. So wherever that level is, where demand feels comfortable beginning to accumulate positions, we'll see this volatility begin to contract, and we'll start to get patterns that tell us of what's going on. We'll have to see how long that takes and how long that takes to unfold. But something like this typically doesn't go away, in the next 2 days, or maybe not even in the next 2 weeks. So again, it's September, worst month of the year, and all of that. And then we got the big hype of the October crashes, which were really the climactic move that started in September. We haven't had one of those in a while. Maybe this is the year. Who knows? We'll just see how it all unfolds. We just look to the left, see where the reference points are, see what happens when we get there, and so on. So if it just take the 20 MA as a reference point, even though it's not real support, let's just say it was this area, this point in time, or its price level was a pivot low, and prices crashed right through it like it's not there. Well, it's telling you that supply is well overwhelming whatever demand is there and going through it. In other words, we're looking for the reaction at these reference points to the left, just like here. We'll be looking for what the reaction is at the open. That's what buyers are going to do. Are they willing to step up? And if they are, how high can they take it? So when we look at what happened on Friday, this is what someone referred to, it's just a technical bounce. True. Now, what does that mean to us? It's just a technical bounce. That means it didn't overcome any significant resistance area. It just retraced into the void that was created by the sharp move lower. Now when it reaches resistance, the sellers come in where sellers again feel comfortable selling and putting in that supply, and the cycle just continues within multiple time frames of supply and demand reference points. So this weekly chart tells us that what happened here is that the volatility went crazy. Right? We got a tail on the top, we got a tail on the bottom. Meanwhile, the candle bodies are about the same size, and it's going sideways. So these big moves, of course, have a tendency to make us believe that much more is coming that's going to be worse. And it might, but we keep things in perspective. And so this strength of this chart here has to be respected, this weekly time frame. Sure, there's support here, but this could turn into a big wide trading range, which is also a correction. In other words, we really don't know what's going to happen, but we know we've got a shot across the bow, so to speak. This is still in an uptrend. We don't want to, start projecting, dramatic outcomes to all of this. I know some people like to do that, but that's not the reality of the way a trader's mindset should work. Until this is in a downtrend and this begins to break any significant support, you shouldn't be thinking like aggressive, like, this is a cyclical bear market, the kind of terminology that comes out. We just follow trends. So let's look at the other markets here. Spiders, right? Big drop too, went through the 20, didn't quite get down to that pivot low, but got to an area. There's a 386 or so. So down near the prior low, same story, came up to resistance, got knocked back down. Maybe this can turn into a W bottom and come back up. So everybody want, in the room and the YouTube there, what's SPX? The zero data expiration trade. Well, I'm not so sure, other than to say the top of this pivot high here would be a reference point. I mean, as it comes down here, how much is it going to bounce? All right, what's going to be the reaction down there? We have to wait and see. So here's SPX. We know we got a significant support level here. And this came down to that level on Friday, and buyers stepped up big. Now we know by looking at the spiders that are down here again. There's plenty of room to drop down to the 50. So it would be prudent to wait a little while, I think, and see how things shape up here at the open, where the buyers really want to step up here. And then whatever the premiums are, how far away can you get from the danger? Where's the danger? Well, where it's opening down here, if you get close to that, you're basically getting in the cage with the lion, and you're the piece of meat, because the odds of going through that are pretty good. What are the odds of staying below it and dropping? That's the unknown. So with the leverage that you have with this instrument to trade, you better get away from the danger so you can run like hell without losing an arm and a leg. So again, we'll see how that shapes up. Up above this level should be safe. Okay, since it's retested this and it's back down again, and it'll have to travel all the way back up here where the buyers that held over the weekend would just hope to get their money back. All right, they're actually a little desperate to get their money back right now. So 32.50, that might be it. It could be okay, McGraw. It could be okay. It's close to the danger, obviously, but that's where the money is. That's where the money's going to be this morning. With a gap down here, those strikes are going to be juicy for sure. But you know me, I'd rather be down here with a little less juice. I'll take the tough meat, so to speak, not the filet mignon for the sure thing that it's not poison. But, we'll have to see. Close to there, it's going to be the big money. But if it begins to hold, so here's the trade-off. We wait. At the open, that's going to be maximum money if you want to step up for the plate, right? You could start out with a smaller position and then add to it, of course. But if it holds here for a half hour, well, those strikes, those options are going to be worth less money because of the time decay and, of course, the bounce off of the low. How much it bounces from there, well, who knows? But if it comes back down again, the ebb and the flow, it comes back down. Those strikes go up in value again, but maybe not so much because now it's drifting down. So, that give and take, there's a cost for safety. There always is. So I would look down here under the 50, see what's available. That's pretty far away. We know it's down here. So, just waiting 15 minutes or so to see, how these markets bounce or the lack thereof, I think makes sense. What the 50 is basically this moving average right there, 32.95. So maybe 3,300 being a whole number. You've got this. And then, of course, the target would be that unfilled gap that's down there. That's pretty far away. But if we get a sell-off, let's say the lows don't hold and things go down even further and down into this area, well, then we'd be looking at strikes down below, which will be juicy too. So I think it's prudent to wait a little bit and see how it shapes up. So you said 32.50. 32.50, yes. I was probably reading 33.50. I'm sorry. Yes, you did say 32.50. I was thinking you were saying 33.50, and I'm like, well, you're really going for it. But yeah, 32.50 makes a whole lot of sense that far away. Absolutely. Because you've got your defense line out there, in a sense, to say the 50 MA is up above there. And while not real support, institutions are going to use it. So, all right, let's take a look at other things. Getting late, talking a lot about this. NASDAQ futures, coming down to the 50. Know your reference points, right? So know where the 50 MA is on the NASDAQ futures. Know. If you don't even know where the 50 MA is on the Qs, about the same area, give or take, and that swing low. Set alerts. You don't have to be staring at it. S&Ps, where are they at? Right, down near the low. Power downtrend, starting to stabilize a little bit. Not really a big deal. Weekly like it's going to go lower. Set an alert at the 50 MA. YM. Some relative strength. Right? Wide range bar, breakout failure, igniting a move down. It's likely coming down here. Set an alert. Russell. Terrible breakout failure. Mini breakout. Just a bottoming pattern that failed and a violent reaction. Came down to the 50, cut through it. Looks like it's going lower. So this might be the area down where buyers feel comfortable and that range contraction begins. Bonds, of course, are up. All right, jiggling around there at support. Oil down a little bit. Actually, crashing down here. I didn't look at it pre-market, but nasty move to the downside. Not good for the markets. Looking at all of the things that come to play with, oil dropping, bonds, being bought, all of the things that suggest fear. And we should look here, just something else for you to be aware of and set alerts at is your volatility index. But this is VIX. This is right. No, up here, 44, set an alert. Take a look at and set an alert on VXX. Right. At these levels, intraday, know that. Your put call ratio total, set alerts 1.3, 1.5, all of these things, NYSE tick hitting extremes and your alerts going off. That's your support team telling you that things have gone too far when those alerts start going off and you don't have to be watching them. So all yours, Dan.
I like that, your support team. All right, hope everyone had a great long weekend. We have pretty light inventory. Weekly options trader, it's one of those rare occasions where we're flat. We got 4 or 5 in the advisory, and most of them are fine. Satish we're long, and it looks like it's gapping here to the lows, so I went ahead and just moved stop to break even. Yeah, hey George, yeah, the keys were awesome. Zoom here, I'm watching to sell a put spread once I get a reversal. You know, and I'm just gonna tell them to hold off. I don't want them jumping in front of a tanking ship. So let me post that. All right, let's see. YouTube's asking about a couple. Yeah, YouTube's asking about. Hey, that's funny, Greg. Did you see what you just posted? On YouTube, his screen name is Mr. Blue Chip. And they're all you know, these volatile, well, Apple's obviously a blue chip, so is Amazon, but they're the 3 FANG stocks. He's asking about Apple, Amazon, Tesla. Let's take a look at all of them. All FANG stocks. Apple started to sell off on Wednesday. That one was early, and remember, just because of the nonsense extended run into their stock split and a day or two after the stock split, I was watching these to short. And so that was a gap and crap on Wednesday. a biggest 3-bar sell-off in a very, maybe the stock's life. I don't know. But right now it's gap in the mid-range. There's no pattern. Resistance above, support below. I think Greg nailed it talking about, we need stabilization and narrowing range. I have no idea where Apple's going. Hey, Algemontas, welcome. Where you type to us, if you can put your drop down to all panelists and attendees. All right, Amazon, Amazon the same. Gapping down, it's bearish consolidation, 30-minute low. It looks lower. Facebook it is the weakest so far, gapping to Friday's low and a bearish consolidation. So that of the three so far, that's the best looking day trade short right now. Google is gapping under the lows. Wow. These fangs are getting hit hard. Look, gapping under Friday's low, and it's a sell setup. I mean, I'm not doing anything at the open either. Netflix, same big fat neutral. I don't know what to do with that. And Tesla, poor thing, is not getting added to the S&P 500. And remember, on this gap up day, that gap up day was the announcement of the stock split. And look at this crazy run, 300 to 500, and there's zero economic difference of a stock split. But the street says, oh, well, it's going up on this S&P 500. You got Robinhood traders chasing everything. Even Kramer always makes fun of the Robinhood traders also. And I agree with him. He's like, they need a course. They don't know what they're doing. These kids making $1 million day trading, they don't know how to handle risk. And now they get a margin call. They've blown it up. All right. So that's it. Let me just go through my watch list items here. Nikola and General Motors are entering into some deal, I guess, making electric trucks. So they both have bullish gaps. Nikola GM, $32. That's a beautiful gap in a weak market. So well, I have them in my other charts, but I'm going to put it there to keep a closer eye on it. Teradyne, there were 3 stocks I got added to the S&P, these 3. Teradyne, but absolutely no pattern. Etsy, maybe a day trade long. It's holding up here near the opening price on Friday. So that's relative strength pre-market. That's worth watching. For day trade only, I was saying the same thing on Thursday and Friday with the market getting whacked. I'm like, no swings for me. They were just day trades. And then this got added also, which is absolutely no positive reaction. I'm actually pretty shocked that Tesla didn't get added. I mean, I don't even know. Etsy's a new company. I don't even know what CTLT does. Everyone knows Tesla. All right, FT, yeah, we can talk about that later. All right, SXC. I actually thought this was a ETF. I put it in our ETF trader, and then I just corrected it and gave it to our advisory letter. But I like this over the high, Friday's high, daily, weekly breakout, bottoming pattern. So this is SLX. which is the steel breakout daily, weekly. Very light volume, but let's go hunting in this sector more later. That's looks great. BMO, Bank of Montreal. You know, we have our eye on banks and airlines too, believe it or not. They're both trying to bottom. But this is a little bull flag after a beautiful blast off here. It's a weekly 1, 2, 3. So that's definitely on my long watch list. My house cleaners here keeps opening doors. So X, if it can break out, you know, I showed you steel sector was holding. CSIQ is a buy setup, but it came in steep, but it's still, you know, it's still bullish. Let's keep an eye on that when the market and sector stabilize. PFGC had to get over the high. BAC's on my watch list, another bank that can get over Friday's high. Same with SYF. JCOM is a breakdown candidate. Market weak pre-market, market weak in the first 30 seconds. So JCOM here looks great. Well, I'm going to get rid of General Motors because I have them in my other charts. So JCOM, let's wait 5-10 minutes. This looks like a fantastic day trade short setup. PNR, maybe day trade. The way this one's churning its way up though, I would prefer maybe 15 or 30-minute low. FFIV was on my short watch list. Actually, I've been watching it since Thursday and Friday. FCX is copper, but you know, the steel sector. Caesar's Palace, long watch, Workday. Workday is similar to Zoom in the sense big old gaps coming down, filling the gap. That one actually exceeded the gap. But look at Zoom. Let's keep an eye on Zoom here. Let me see where those 300 puts are now. Yeah, 300 puts, $1.85 by $2. Actually, we can do the 290s. 290s for $1.20. Let's do it. Let's do it. The 290s, $1.20. CFO. CFO, Jake, I have no idea what you want to do with that. There's no pattern. PCAR. PCAR, yeah, 30-minute low, Sanjay. Or 10-minute low, 15-minute low. But yeah, it's a bear 1, 2, 3. I'll put it on another window. Yeah, I just don't want to rush into much here. Qs, some of the fangs stabilizing, which is why the Qs at least are above their open. The other markets are still selling off. Boeing, there was an article in the journal that it is having 737 MAX problems. And that actually looks like a swing short if it closes here. That looks horrible on Boeing. You had three, you know, like 3 breakout failures. Let's watch that. Zoom, I said you could sell the, here, I'll give it to you right now. The 290s, 290s for $1.25, $1.20. Yeah, 9/11, yeah. So that's what I gave. Yeah, this Boeing looks horrible. Yeah, I mean, you heard me saying it looks horrible. I mean, you can short it. It should not get over Friday's high. If you're shorting it as a core, which is very possible, well, man, I take that back. It's not a core setup, so strike that. Colette, GM a day trade or swing? It could be swing if it sets up. Colette, look, it's a gap breakout, daily, weekly, relative strength.